2015, we're anticipating anywhere between 3,000 and 5,000 of the best agents in the United States are going to be at that event. So we're really excited, and we're really excited to have Ryan Snyder with us today. Ryan, we look forward to your presentation, but just give me about a 1-minute overview of the feeling and the thoughts that were going through your mind at the incredible event that we was having together in Las Vegas. And once again, I really appreciated you, Dennis Sudak, and Ryan Parker for everything that you did for us in Las Vegas. But give us about a 1-minute overview and then just take us right into the incredible FEG annuity product. And we're still there. Let me see if I lost Ryan. Ryan, we cannot hear you, but we can see your screen. Ryan? Well, let's give Ryan a couple of minutes here. We seem to be having technical difficulties with his audio. And as soon as he fixes that, Ryan, if you could just dial back in, I can see that you can hear me, but we cannot hear you. So while we're waiting for Ryan to get back on, and while he's dialing back in, once again, after that great introduction that we gave him, he will be on here in just a couple of seconds. But once again, we're looking forward to some additional meetings, and I'm going to list some of these meetings off here now for you. We have our Pleasanton meeting coming up, and this is the Year of the Builder, coming up in February 20th and 21st. We have our Year of the Builders meeting coming up in San Diego, California, March 13th and 14th. In Houston, April 10th and 11th. In Hawaii, the great state of Hawaii, in May, we'll have that date confirmed. Then we'll have our annual award gala, June or July 10th and 11th. And it looks like we have Ryan back on. Ryan, are you there?
I am here. Can you hear me?
Fantastic, Ryan. Give us once again your 1-minute overview of the thoughts that you had from Las Vegas, and then take us right into the hottest product on the planet on the annuity side, which, by the way, the living benefits are available in the state of California. So take it away, Ryan.
Thank you, Bill. And it was quite an honor to be invited to the event in Las Vegas and have the opportunity to talk a little bit about FGL and our annuity suites. I can say from my personal opinion, it was one of the most exciting events I've had the opportunity to attend. There was so much talent in the room, so much camaraderie, and so much teamwork. I am certainly excited to join you and meet many more of you in the upcoming events coming through the year here. So with that, if I could, I would just like to take a few minutes here to talk about one of the lead products in the FGL annuity suite today. Now, Fidelity and Guarantee, we pride ourselves on product development and product innovation. So we've got many project initiatives annually, and those range from refreshing current products and existing products to stay competitive, as well as brand new launches within the industry to serve the ever-changing needs of our clients and do so very, very competitively. As we do these product initiatives, we have a particular focus on living benefits and providing terrific benefits to our clients. And the screen you're seeing here are those that we really try to focus on with our products at Fidelity and Guarantee Life. Of course, living too long and outliving savings is a huge concern with today's retirees, and we've got some great products that address these concerns. In addition, clients who are living on a fixed income, they have those concerns about falling ill. What if I were to become ill and need to access more income more quickly? With rising medical care costs today, this is certainly a major concern Again, we've got great products to serve that need. And finally, what if the worst should happen? What if I were to pass away? What becomes of my loved ones, and how will they be cared for? Again, we've got some terrific benefits in the annuity suite that addresses these. What I'd like to do with my time today is just talk about the lead product in the annuity suite with Fidelity and Guaranteed Life, and that is Safe Income Plus. Now, this is the latest addition to our annuity portfolio, launched just in August of last year, and we could not be more pleased with its reception in the industry here. As the name suggests, this product is all about guaranteeing the maximum income for life for retirees. So without further ado, let's dive in and take a little look at how this product works. Up first, just some nuts and bolts on the product. This is a 10-year chassis, so it is a 10-year surrender schedule. Now, this product does offer an 8% premium bonus for all ages, all the way up through age 80. Now, this bonus goes both to the account value or cash value of the account, as well as applies to the income base, which helps to drive those guaranteed lifetime income payments. So great value there, getting a bonus both to cash value and income potential. Now, the bonus vests over the period of the contract on the account value side, 10% a year, as you see along the bottom of there. That said, I do want to note that that full 8% bonus is applied and starts gaining interest from day one on the contract over the period, and we do not take that bonus away should the client die within that vesting schedule. We consider that vesting bonus fully vested at death. So even if a client were to pass away, say in year 4, they get that full 100% bonus and interest applied to their death benefit within this product. So that really speaks to the peace of mind with the living benefits of what should happen if I pass away too soon. But as I mentioned, the real key with Safe Income Plus is the guaranteed income. So the way that works is, as I mentioned on the previous slide, you've got an 8% bonus right up front on the income calculations with this product. So you've got your initial premium plus an 8% bonus. What's even greater is that value is growing at a guaranteed rate of 7% compounded. Now, that's guaranteed for up to 10 years. The other factor that's driving those guaranteed lifetime income payments is the payout percentages. Now, these are based upon the client's age when they choose to trigger the income. But these payout percentages are increasing 10 basis points annually. So each year a client defers or waits to trigger their income, they'll be increasing their payout factor and in the end increasing the amount of income they'll be receiving for life. And the final point we'll talk about today with Safe Income Plus is that Impairment Doubler that gives the opportunity for the client to double their income should they fall ill. Here's a snapshot of those guaranteed age-based payout factors we discussed just a moment ago. As you see here, if you're familiar with some of the payout factors out there in the industry today, you will note that these are some of the highest out there. Particularly, if you point out a few, at age 65, 5.3%, age 70, 5.8%. We'll talk about a little bit how these factor into the guaranteed income payments in a slide here or two, but just know that these are one of the real keys to driving the income in this product. So I've told you how the product works. Let's take a look at an example about how this product can really deliver some high guaranteed lifetime income for the client. So in this example, we've got a 65-year-old client who's put in a $100,000 initial premium into the policy. So after 10 years with that 8% bonus and growing at that 7% compounding rate, that $100,000 has grown to over $212,000 as you see there. Now what we do with that income-based value is multiply that by the age-based payout factors we talked about. So at age 6.3%. So what that guarantees this client, should they trigger income after 10 years, is $13,384 guaranteed for life. Now, what's great about Safe Income Plus, that is a great value, but we also offer some great optionality for clients. Let's say, for example, this client planned on triggering income within the first 10 years, but their situation changed and they could afford to hold off and allow those funds to grow a little bit longer. We do also offer a restart option. So this allows the client to restart that roll-up for an additional 10 years, and it continues to grow on that $212,000 number we've seen there. So let's say, for example, this client chose to restart and let those funds roll up for an additional 10 years. If that were the case, that income base would grow from $212,000 after 10 to over $258,000 after 20 years. Now, as I mentioned, she's waiting a full 10 years after the initial plan to trigger income, so her income factor is increasing each additional year. So that payout factor has grown from 6.3% to 7.3%. And take a look at what that does to her guaranteed lifetime income, $18,905 for life. So very, very strong peace of mind for clients worried about outliving their money. They can secure guaranteed income for life with this product. Now, as I mentioned, our clients are certainly concerned about triggering income. They're getting that income, but what if I were to fall ill? What if I need more money to cover medical care costs? This is a huge concern with retirees today, and we've got a terrific solution built into Safe Income Plus. Up first, let's talk quickly about how we define impairment within this product. It's the inability to perform 2 of the 6 activities of daily living. It does need to be doctor certified, and the client does need to be receiving licensed care from a professional for that impairment. There is also a 3-year wait from the issue date on this product. Should the client, however, meet those qualifications, let's take a look at what that does to their income. So here's our same example from earlier. We've got our 65-year-old client who put in $100,000 and triggers income after 10 years, getting that $13,384. Now, if the client were to fall ill and meet those qualifications we just talked about, this client could receive double the income. So that $13,000 is doubling to over $26,000. So this is a terrific benefit for clients who've got rising medical care costs and need to access those funds. Some real within this product as compared to some of the others out there. This doubler will continue for as long as the impairment exists or until the account value is depleted to 0 through those withdrawals. So there is no 5-year limit or anything like that in the amount of time that the client can access that doubler. As long as they're impaired and as long as they've got $1 in their account value, they'll continue to get that doubler. Now, what's really great about this product is even once that account value is depleted to 0, the client does not stop getting income. They simply revert back to that original guaranteed annual withdrawal payment of $13,384. Now, it is worth mentioning that this impairment doubler benefit is available and approved in California. There aren't many products out there that offer this in California today, but Safe we'll talk about is home health care. The client does not need to be confined to a facility for their impairment. They can be receiving the licensed care in their home and still receive this doubler. Again, great peace of mind for clients concerned about falling ill and needing to access funds quicker. So that's Safe Income Plus, and I'm sure you'll agree it's a terrific guaranteed income story that delivers guaranteed income as well as some impairment protection. What I'd like to quickly do in my last few minutes here is talk about some of the tools we've got available. It's really one thing for me to tell you about how great this Safe Income Plus and the value it delivers for clients, but we've got some great tools out there available for you. In particular, our product calculators. So this is a screenshot of our agent portal with Fidelity and Guaranteed Life. So these are calculators that really allow you to quite simply put in some case details. If you've got a client in mind who may be looking at this product or you've got a case in mind, throw in some numbers. You can choose, obviously, choose the product Safe Income Plus, the client's age, the initial premium. And what that does is gives you a terrific output. So this shows you how the income base will grow over the period of the contract. And what's really great about this is you can put this down in front of a client and tell them what their guaranteed income payment would be at any point. So this is a great case design tool for yourselves, the producers, to wrap your head around if this product will be beneficial to your clients. But some of our greatest advisors are using this at point of sale and putting this output right in front of a client and talking through their case, talking through their income plan, and they can point to a number guaranteed at any given year. Miss, should you trigger income at age 70, we're guaranteeing you that your income will be this number. And as you see, we've also got that enhanced withdrawal payment doubler there, so they can see what their doubling payment would be should they fall ill at any point. So again, just one of the great tools we have out there for advisors as well as clients for use at point of sale. And with that, I certainly thank you for your time. I hope you see the real value with Safe Income Plus and what a great product it is, delivering that guaranteed income for your clients. At this time, I'm going to kick it back over to you, Bill, to talk a little bit about the life offerings at Fidelity Guarantee.
Ryan, are you there? Bill,
I
are you
am
there? Okay, Ryan. I'm not sure where Bill went. This is Petro.
I'm right here, Ron. Can you hear me?
Yeah. Okay.
Okay. Ron, since we have you on the line, do you have a couple of words to say before I get started on the life side of the presentation?
Yeah, I'm going to be real quick. I really, I've had a chance to take a good look at this product. I have to say that in my honest opinion, this is probably the most exciting product launch I've ever seen in my career. In my opinion, this is the new wave, or this is the new kind of IUL. It's not a normal IUL. It's an upgraded IUL. In many, many ways. So anyway, welcome, Ryan. You guys, we need to become students of this. Michael St. Clair here in the San Jose office knows the software well. So if you're having difficulties loading your software, or you need help getting the software, using the software, in addition to F&G, we have Michael St. Clair here in the San Jose office to help you guys out. So with that said, Ryan, it's over to you.
Okay, it's back over to me, Ron Petrinovich, and this is Bill St. Clair, the new life group, just kidding, Freedom Equity Group. But today I'm really excited to give this presentation on the life side. Usually we have Ron Petrinovich doing the life presentations and all the trainings, but I'm really excited to give this presentation today. So we're going to take a quick look at the F&G company itself. F&G had launched its IPO, and its ticker symbol is FGL. There's 3 locations, the Des Moines office, the Baltimore, Maryland office, and the Lincoln, Nebraska office, with over $22.4 billion in total assets. We're never going to be able to scratch the surface of this company, and they have a large war chest of monies, not just for the clients, but for the individual agents. Over 96% of their assets are rated NAIC 1 and 2 categories, which is the best in the industry. We have risk-based capital in excess of over 400% with this company. Solid rating reviews from AM Best, B++, and they are looking to get to that A- status here in 2016. and it's the 5th highest out of the 16 rating classes throughout the United States, with over 700,000 policyholders, with 20,000 licensed agents in the U.S. today, with the dedication from all of the agents on the call today in Freedom Equity Group to take that number to 50,000 licensed agents in 2016, 30,000 of those coming from Freedom Equity Group alone, so we're really excited about that. Let's just go right in and take a look at the Fidelity Guaranteed Life product positioning, and then we're going to take you right into the software. So we're going to introduce today the Synergy Gold, the Advantage Gold product, the F&G Elite, and we're going to briefly touch on the F&G Life Choice product. We're going to take a look at past performances on our IULs. We're going to take a look at underwriting standards and how to do business with us here at F&G. But first off, we're going to take a look at our products, and I've kind of set it up so that we're going to take a look at the Elite and the Choice and then move to the most powerful product that I've seen in the fixed index UL industry in the country, and that's called the Synergy Gold, Synergy Global Advantage Gold. So let's just take a brief cap and overview of the FEG Life Elite. This is a strong tax-free income product with a maximum guaranteed variable loan rate of 4.5%. So this is something that's very important to understand. When we run our loans and we run them at the variable rate, F&G has locked that rate in at 4.5%, can never go higher than that rate. If your variable loan rates today, they're averaging between 4.2 and 4.5%. The other carriers have the opportunity for those variable loan rates to go up above 4.5%, which could dramatically decrease the amount of potential tax-free loan income to your clients. We have higher caps specifically on the Elite product, so if you're taking notes, they're going to be a little bit different on the Synergy Gold product, but we have higher caps of 14% on the Elite with 100% participation, annual point-to-point option, and we have higher target premiums. So the Elite product, I would say, is one of the better products in the United States with cash accumulation, death benefits, and, of course, the living benefits. Just really briefly on the F&G Choice, because this is one of your options when you're going to choose the product that you're going to write with your clients. It is one of the strongest in death benefit sales and is used as a long-term alternative with strong cash values, accumulating potentials, offers no extra per $1,000 charge, and it's very competitive. And you're going to find this policy works out really, really well for what we call like the $1 million baby type presentation illustrations that we utilize. And this policy works very well for maybe the older market, somewhere around the Romanovich age, tipping into his 80s maybe. So remember, with the three products, you have choices. It's the F&G Life Choice, the F&G Elite, and then, of course, the Synergy Gold, which we're going to talk about. But let's take a look at a couple of past performances on the F&G Fixed Index UL products, the Elite and the Choice. Since the introduction of the new F&G Life Elite product in November of 2012, there's been 9 monthly index allocations, and you can see it here. Over those monthly periods of time, the weighted average has been 19.62% in the S&P. The index initial credits during that period have been 16.52%. Now remember, on that Elite product, we have a cap of 14. So in this period of an example, the clients would have received over that 9-month period, if that was the year that the yearly reset was set, they would have received the full 14% credit again. As we take a look at the past monthly index values on the F&G Life Elite since November of 2012, those are very, very strong values. But now we're going to introduce the product that really 100% of us should be focusing our attention on. I just really wanted to briefly go over the Elite and the Choice. But that product, which is only available to the Freedom Equity Group agents and the person who brought it to us and a select amount of a few other agents throughout the United States, no one else in the country can get this product. And that product is the Synergy Global Advantage Gold. Once again, it's called the Synergy Global Advantage Gold. And the Synergy Global Advantage Gold, here you have the power of options. So what are the options? First off, we have our fixed index account. Number 2, we have our S&P 500 index account. Number 3, we have our gold commodity option account. And number 4, we have our Dow Jones real estate account. And we have the option to blend all these accounts together. Before I move on, I want to explain the power of these accounts. Fixed indexed accounts, somewhere around 4.5%. We're going to see that in a minute. The S&P 500 index. Here's the thought that I want to put in everybody's mind, is that you have the option to move from one index strategy to the next, and you have the option to blend these strategies together. But we've seen it over past performance. If something happens in the market, with all the other products out there, you don't have this option. But if something happens in the market, the S&P 500 index in the real estate market usually goes down. What goes up? Every single person on the phone said, well, when the index market goes down and the real estate goes down, gold goes up. So what am I going to do as a client? I might reposition my option in the account from the S&P. Why should I write out the down and just stay down for a year or two when I can jump into gold when that gold might be going back up to $1,100, $1,200, $1,900 an ounce? So those are very powerful options that you have here. And with that Dow Jones real estate estate account, this is where you have the real comeback. That real estate prices are on the comeback. Everybody sees real estate rising. And if you have the opportunity, which I think every single agent on this call needs to take this out to a client today and sit down with them and talk to them about indexing, talk to them about the IUL benefits with living benefits. But the minute that you talk about the S&P 500 index and a gold strategy and a real estate strategy, where do you think the majority of your clients are going to feel really comfortable putting their money in? Even though you're guaranteeing no losses inside of these strategies, they're going to be guaranteeing their money inside of that real estate strategy, because that's something that they're very, very familiar with, is a real estate strategy. So we have a spread versus a cap on the upside potential. It's an uncapped strategy, has the ability to deliver real performance. Once again, we have no cap on this. So if we deduct the spread from whatever the performance is, and let's just say that the performance is 25% and the spread's 1.50, that means that those clients are going to receive 23.50% credited to the performance of the index that year. That's right, this is an uncapped strategy. And it's the real estate index credits will never, ever be less than 25 basis points. This is unique to the entire fixed index UL marketplace in the United States. So let's take a look at the Dow Jones, and this is what it's called. It's called the Dow Jones Real Estate Index, and here's its historical performance. The allocations tied to the performance of the Dow Jones Real Estate Index account, an annual 1-year, no cap, point-to-point index, interest crediting options. If we use a 20-year look back with the current spread where it's at today of 1.50% to determine our current illustrative rates, that means on a 20-year look back, we currently have received 10.77% rate of return. So if your clients were actually in this strategy for the last 20 years, they would have received an average weighted rate of return of 10.77%. Now get this, that's also the ability of where we have to currently illustrate the performance of this specific index strategy at 10.77%. So if we take a look at the S&P 500 that's here in the left corner, and we're going to take a look at 20-year, 15-year, and also 25-year lookbacks. On the S&P 500, on a 25-year lookback, we've averaged 8.37%. On the gold, on a 15-year lookback, and remember, at a current cap of 13.5, the gold got a current cap of 14, and the Dow Jones only has a spread of 1.5 with no cap. The gold we've averaged a little over 8.5, and the Dow Jones real estate we've averaged 10.77%. So if we take a look at how important are the volatility controls inside of this, from January 1st, 2007, January 1, 2009, we had one specific period of time that had a down of only 6% over that period of time. Even with the down market in the real estate, when the real estate market crashed back in 2008, and that market was still down, throughout that 20-year period of time and that average, the Dow Jones Real Estate Index still averaged at 10.77% over the 20 years. That's phenomenal. And something that I heard while we was in the event in Las Vegas was this specific index strategy outside of the market crash back in 2008, never in the years prior to that had one down year ever. So this is one of the most powerful index strategies available. Let's take a look at the key features of the product. Minimum face amount on this product, $100,000. Issue ages 0 to 80 or age of last birthday. Living benefit riders are available. Accelerated benefits for critical and terminal illness. Maximum guaranteed variable loan rates on the Synergy Gold is 4.5%. On the Elite is 5%, and the F&G Life Choice is 5%. But on the Synergy Gold, it's guaranteed never to be over 4.5%. We have fixed loan options, 2% first 10 years, 0% after that. Surrender charge waiver on excess premium on the Synergy Gold and the F&G Life Choice. No extra per charge for the F&G Life Choice, and after the 10th year, going into the 11th year, we have a 25%, 25 basis point persistency bonus starting in the 11th year. And they have liberal preferred underwriting guidelines. I can personally account for their underwriting guidelines. They're very strong, but they understand how to underwrite, and they give accurate. If you're standard, you're going to get standard. If you're preferred plus, you're going to get preferred plus. It's accurate as it gets. Let's take a look at some of the living benefits. We have the accelerated benefits for critical illness, up to 100% of the death benefit of the insured if the insured suffers something like our big three: heart attack, stroke, cancer, etc. Right now, our living benefits on this product, which is also available in the state of California and most of the other states, is capped at $500,000. They are working at a feverish rate out at F&G to get that number up. Hopefully, we're going to see some changes in that number. But right now, it's at $500,000. Potentially could be at $1 million, $1.5 million, or maybe even $2 million coming soon in the future. We also have the accelerated benefit for terminal illness, up to 100% of the death benefit if the insured is diagnosed with a terminal illness and has an expected life expectancy of less than 24 months. We have our overloan protection rider. This prevents the life insurance contract from lapsing as a result of outstanding loans. We have a waiver of monthly deduction rider, keeps the policy in force, waiving the monthly charges should the insured become totally disabled for longer than 6 months. Before we get into the software itself, I just want to give you a brief overview of the F&G Life underwriting as far as 2014 was concerned. If your applications are in good order going in through the door, that means the I's are dotted, the T's are crossed, decisions are made on 79% as they are applied for, 10% other than what they are applied for, and this is basically saying that 79% of the apps that are going in because you're a great agent out there, if you're saying that this client's preferred, 79% of them are getting preferred. 10% of them, they might say, no, they're standard. 6% were declined in 2014, 4% withdrawn, 1% postponed, and only 13% of all apps that went in 2014 required an APS, and 18% of them required phone interviews. That's an outstanding underwriting guideline. Let's take a look at some of the reasons what we're going to say not in good order, just so that you can keep this on the top of your mind, because what you want to do is you want to give incredible service to your clients, you want to get them issued, you want to get them insured, and you want to get paid. So NIGO means not in good order. So 24.7%, believe it or not, is missing the owner's name. So just make sure that the application is done completely. 18.5%, we forget to put in the face amount. Even though we're sending in an actual illustration, we still require the face amount to be placed on the application. 12.3%, we forget to put the insured's age on the application. So let's make sure that we're taking a look at these areas. Guaranteed rates, we're leaving off there at 7.4. Non-guaranteed rate, 7.4. 4.9% of the apps that are going in, we're forgetting to put whether they're a male or a female. 3.7%, we forget the owner's signature. Premium amount illustrated, 3.7. So this is just some of the areas. But let's just take a look at the first three. Make sure that the owner's name's on there. Make sure the face amount's on there. Make sure the insured's age is on there, and make sure you get the gender. They're either male or female. There's nothing in between there that I know of personally. And this is going to make sure that your application goes through in a speedy, incredible nature. So with that, we're going to jump right on over to our illustrations. Once I can get to my computer to figure out how to get to the illustrations, we're going to jump right on over to the illustrations here. Okay. Okay, so let me get out of here. And I cannot get my screen to let's see.
Hey, Bill?
Yes.
Do we want to address at all how to get the software and some of the challenges people have been having? Because I've been hearing quite a bit.
Absolutely, Ron. We want to address how to get the software. Now, we're going to send everybody that's on this webinar a special link to download to get your software. If you already have the software loaded onto your system, the old software, you have to completely uninstall that program and reinstall this new software. And this new software will have the Elite, the Choice, and the Synergy Gold itself on there. So remember, if you have the old software, you have to completely uninstall that program altogether to get to the new software. So as long as we can remember that, we're going to be just fine. And once again, if you have any problems, all you need to do is get a hold of Michael or one of the software experts at FEG. So with that, what we're going to do here is we're going to take you right into a software illustration. And this is how easy it is. If I can do it, anybody can do it, I hope. I got that right. So what we're going to do here, first we're going to put the proposed name in, and we're going to call this client Ron Petro. And we're going to say that Ron is 45 years of age. So Ron, you now turn 45.
Love
here.
it.
It's very loving that. We're going to say that Ron's in the state of California. We're going to go over here. We're going to select type. We're going to go to the Index Universal Life. And then right here, we're going to find the available products. And once you punch that button, you're going to see a drop-down menu of 4 products that could become available. This is where you select your actual IUL product. And here we're going to select the Synergy Global Advantage Gold product itself. Okay, from that point here, you're going to come up to a very simple screen. So far, so good. Bill St. Clair can do it. Anybody can do this. So at this point, we're going to go into we're going to make sure our client information is correct. Male, wait a minute, is that a female or a male? Ron Petrinovich, it could be a male. Okay, so now we're also going to say that Ron Petrinovich is in great health. So we're going to give him preferred non-tobacco. From this point here, what we're going to do, we're going to jump over here to the premium mode. And where it says payment option, we're going to choose what payment option we're going to do. In this case, let's say that we're going to do an annual payment, or let's say a monthly automated draft. It doesn't matter. This time I'm going to show it on annual. And in this scenario, we're going to put in, let's say, $1,000 a month, $12,000 a year, because this client really wants to supercharge his life insurance policy. Then what we're going to do, we're going to go back over from the premium side, this area that I was in over here, over to the solve side. What we're going to do there, we're going to click max accumulation, then withdrawal. Very simple so far. I've clicked a couple buttons. We're going to drop down to solve for face. Okay, once you click that, we're going to drop down to, we're going to change this cash value here to $10,000. And we're going to take that all the way up to age 120 years of age. We're going to go into the loans. We're going to pick loans only. We're going to start the loans here at age 65 years of age, and we're going to run that, say, for 35 years. 35 years up to age 100. We're going to click here where it says OK. Right here, we're going to click details, because we also have to put in our premiums. So once again, we're solving for face, and we have to put in our specified premiums. So we solve for face, now we have to put in our specified premiums. In this case, it's going to be $1,000 a month. Since I'm running it on annual, it's the same thing. I'm going to run that at $12,000 a year. We're going to run this client all the way to age 70, which we call the new retirement age. We could run it at 65. We could run it at 70. So at 70, I'm going to put 0 in here. So that ends payments at 70. And we're going to click OK. And now, right now at this point, we are basically done.
Hey, Bill, you got to change the loans page 72. You put 65
loan. Okay, well, let's go back here. Details. Let's change that to age 70. Ron is a very, very good student. Catches the teacher every time. Now we have our choices here to the right. Thank you for that, Ron. Do not worry about what it says, initial face amount $100,000. Agents are getting confused. The software hasn't done its calculation yet. So now we have our choices here. Do we go into the S&P 500 index? Do we do a gold? Do we do a Dow Jones real estate? Now, let's just take a look, and let's just say we're going to do a blend. Let's put 33% into the real estate. Into the S&P. Let's put 33% into the gold, and let's put 34% into the real estate. So that should equal, if my math is correct, 100%. From that point here, we just run right over here to where it says illustrate, and we click illustrate, and this is going to generate the output of our illustration. And if everything works successfully, this is how simple it is to run this illustration. And Explorer allows pop-up blockers. Okay. Temporarily allowed, so we're going to have to run this illustration again. They had a pop-up blocker up. As it's generating our poll, again, any questions, so please feel free to ask them. And here we go. First off, you have this incredibly beautiful look that's going to be printable to your actual clients, for your actual clients. As we take a look at this, this is at age 70. So they're going to have at age 70, $945,000 and benefits. Retirement income is going to be $815. Let's go directly down to the proposal. This was prepared for Ron Petrinovich. Annual income, annual premium, $12,000 a year, $1,000 a month. We ran this on option A. You can also run this on option B. 45 years of age, preferred non-tobacco. The initial face amount for the specific client is going to be $645,000.12 day one. So if something was to happen to our client, they would receive the $645,000 tax-free benefit day one to their beneficiaries. Now, as we take a look at the product itself, here Ron has put in $12,000 a year to age 70, and at age 70, Ron will start taking out an incredible $139,425 of tax-free policy loans until he's age 100. 139 for every 12,000 he put in, he's going to take out 139,000. As you can take a look here on our non-guaranteed assumptions based on our past 15, 20, and 25-year history, our current illustration by blending the three indexes together is 9.23%. So let's take a look at it and write those numbers down. 12,000 in, $645,000 death benefit, 139,425 in tax-free revenue. As you screen down the rest of the pages here, you'll find all the signature pages. And let's see if we can get to our bullet page that tells us our details. And you'll have your guaranteed single premium. Here's your target. And we can make this a little bit different to raise the target, because I ran this at the minimum, but it can be raised. So if I can get back to the illustration, if everybody wrote those down, Ron, did you write those numbers down? 645,000 death benefit, 139,000 in tax-free income. If you can write those numbers down. Okay, fantastic. Now what I want to do is I just want to jump back to the illustrations itself, and I want to show you the power of being able to illustrate this on different scenarios. Let's say that now we have a client that says, Bill, I understand the real estate. I want to go into that because I have the option to move my money out. If the real estate market goes down, I still have the zero guarantee. I got the 25 basis points minimum guarantee. So let's move these numbers. We're going to run the same exact illustration. We're going to move these numbers to 100% into the real estate strategy. Enter there. We're going to run that illustration rate, and let's see where we're at as far as what's the most valuable. I'm going to give this question to Ron Petrinovich himself. What's the most valuable living benefit that a client can have, Ron?
In my opinion, tax-free income.
In his opinion, tax-free income. Well, first off, let's take a look. By the time we hit age 70, we're going to have a lot more life insurance available and a lot more retirement income. But as we screen through here, we get to the pages of the illustration. Once again, we still have the preferred 45, $12,000 in a year. Option A is the same $645,000 death benefit. But let's see what our income is going to look like at age 70 when I'm retiring, when I should no longer be working because I didn't work my entire life, so that when I retire, I feel like I don't have the ability to explore the world. Now, because I funded my life insurance properly, instead of, and I hope everybody's looking at this, we still have the same $12,000 in, the same $645 in death benefit, but instead of $139,000 of potential tax-free income when I retire at 70, I now have $209,000 of tax-free income that I can pull out in form of a policy loan for the next 30 years. What does that actually mean for an individual? That means freedom. Freedom to go, freedom to live, freedom to do the things that they wanted to do during their retirement anywhere in the world. Now, the last illustration at 9.2 gave me $139,000. What's the power of the potential compounding at 10.77? $200,000. Blows away the best in the industry that is out there today, and now this product has absolutely taken over and has become the best in the industry itself. So if we take a look and we run this all the way up to age 100 years of age, this client, by 100, would have taken out $6.2 million, put in $300, took out $6.2 million, and at 100 years of age, if they was to pass at 100, they would still pass on $9.998 million to the beneficiaries. So with that, I'm going to turn the call back over to Ron. Yes, Ron.
And Bill, and no variable loan rate risk.
No variable loan rate risk. Absolutely. So with
Bill, I'd like to do one more here.
Okay.
Because
do another one.
I'm Joe Average Agent. I'm going on. I got a $12,000 premium with an $8,500 target. Now I've been through a couple classes, everybody, on this, and I want to help you kind of understand this. So the first thing I'd like to do is let's run the 100% real estate again.
Okay.
Let's run it at option B, but full target. I know some guys that sell it this way, and I'm just curious myself, what would this look like?
Well, before we run it there on option B, full target, what's our death benefit amount? $645,000. It gave us about an $8,500 target, correct?
Yep.
That's $645,000 death benefit. So wouldn't a client like to have maybe more death benefit and more cash value and still wipe out all the competitors in the industry? So all we have to do there is...
You can probably put $1 million.
All we have to do there is click here on income stream. Oh, well, let's click back out. Go back here to max accumulation, then withdrawals. And we're not going to change anything. And we're just going to raise this up. Let's just raise it up to $800,000 and see what we're going to have here. Okay. Okay, so we're just going to raise this to $800,000. All we did was raise the death benefit because we was at $645,000, about $209,000 in cash value, which just absolutely annihilated everybody in the industry. Now we've raised this to $800,000 in death benefit, but the target was only $8,200, and we had a $12,000 premium put in. And a lot of people run this at minimum death, max cash value, and their target should be pretty much close to that $12,000. So if we take a look at it, and all we did was go in and move the death benefit up. Took about 1 second. $12,000 going in, $800,000 death benefit day one, still $193,000. If you run this compared to some of our competitors, we're almost double, if not 50 to 60% higher in cash value. In some cases, we're almost double. But let's go to that target page now and the annual premium page, and we move the target up to $10,560, still with $193,000. So, Ron, you might have been right there. We could have moved this all the way up to $1 million. Let's see if we have enough zeros in there. 1 million. Enter. Let's run the illustration at $1 million. Now, once again, what are we trying to accomplish for the clients? The maximum amount of death benefit, the maximum amount of cash value. If my competitors are all going to be at $645,000 of death benefit, and roughly at about $120,000 of income tax-free at age 70, I'm walking in with a $1 million death benefit, same $12,000 a year premium. $1 million death benefit is a lot more than $645,000, I can guarantee that. And take a look at those numbers. I can't even expand this screen large enough so everybody can see it. But take a look at those numbers. $12,000 premium, $1 million death benefit instead of $645,000 with our competitors, $173,000 tax-free policy loan potential income instead of the average $120,000. Now, why do I say with our competitors? Because I actually ran this scenario, and it averaged about $120,000 tax-free at $645,000, running that at a target which paid about $12,000. Here we ran this one at $1 million. Better for the client, and take a look at that target. $13,200, Al Carty. Did you hear that? $13,200, $350,000 more death benefit, and I still have the potential to give my client $40,000 to $50,000 more tax-free income. So, Ron, I don't know how you can get any better than this product anywhere in the United States. I don't know how every single agent on this phone isn't jumping out of their skin, figuring out how fast that they can write up this product for their loved ones and their family, because this is the game changer in the industry. Ron, is there anything else that you'd like to see from here?
Yeah, Bill, I'm just kind of curious. I'm not sure if you know how to do this one, but let's just try that 100% real estate, same premium, and go option B, full target. I'd like to just see what that one looks like.
Option B, full target. Yeah, you're probably going to ask me to do something I really don't know how to do.
Michael, you know how to do it? You know how to do this one, Michael? Option B, full target. Bill, Michael will help you. He's got this. This is very similar to the AIG software.
Okay.
Which is premium type.
Okay.
Actually, go
Premium type.
Okay, go to that.
There it is. Target. Okay.
Yeah.
And option B. Now, do we put a face amount or do we solve for face?
You have to. You guys, it depends if you guys want to solve for face, and I would solve for face.
Try. Does it say solve for face there?
Yeah, down one more. There you go.
Okay. Try that
Face
one.
amount. Okay.
Yeah.
See, I'm learning as I go.
Sulfur
face.
pay
Okay.
to age 100. I mean, pay
Okay,
premium to age
so
70.
yeah, it should still be in there. The premium mode should still be in there.
Uh-oh, it says solve for return of premium.
Yeah, he switches to solve and switch.
Oh, it is?
Yeah.
Michael, why don't you coach him through this here? I have no idea.
All right. Well, you're doing number of payments now.
Face.
There we go.
There we go.
And then pay premium to a 69 or 70, whatever you guys wanted to do that.
Just put age 70. That's what we did before.
Age 70. Okay. And I think we're ready to run it.
Yep.
Let's do an illustration. Okay, now this is on option B. Now remember, we can change the face amount or options from option B to option A by checking a box. So here we go. This is at option B. So we'll run to the illustration page, Petro. And this is running it on option B. So we have our $12,000 annual premium. Our death benefit is $909,000. And we didn't put in pulling out any loans.
Okay.
Okay, so we need to go back to our. Okay, so we have that income stream. Okay, so we're going to have the cash value. There's our loan income stream. So we got all the numbers in correct. Let's try this again, and this is running it at option B, full target. So the full target on this would have been $909,000. That's one way to find out what your full target is going to be when you're running this software, whether you run it on option A or option B. Once again, we're going to go back through this. And if I can run this software, everybody, anybody can run this software.
Yeah,
I'm an annuity guy.
And it's like anything else. It's just like sitting here doing what we're doing right now to learn it. You know, just taking the time to sit down and learn this baby. Okay, 154 with huge death benefits.
154 with $900,000 in death benefits, but huge accumulating cash values in the beginning of the years. Let's take a look at some of these cash values.
Do we have
just in the 20th year loan.
Can we change to option A at age 70? That might increase.
We can. What you do here is you change face amount or option. You click this box here, and it pulls it up. And then it pulls up a drop-down menu. You take it all the way to age 70. All I did was click that box underneath of it. Oh, we're on option A. We're option B. We're going to pay option B to, okay, all right. And then we're going to switch it to option A. At what age, Ron?
I know.
What age do you want to switch to option A at?
70.
Okay, so we're going to switch it to option A at age 70. Okay. Then we're going to run over here.
Yeah,
and
this
we're
could
gonna
increase
illustrate.
the premium. I mean, the income.
Now
Yeah.
remember, all the time that we've been in this software, I've only been pushing 2 or 3 buttons. This is one of the easiest softwares I've ever seen, and that advanced sales tab, that takes you into a whole new world of being able to illustrate this product and compare it to other types of vehicles out there today, which once again, it's just going to annihilate the competition. So on the option B, we have $165,000 building incredible cash value on an option B plan, paying full target, and $165,000 of cash value, $12,000 a year. That blows away every option A product out there that's not the Synergy Global Gold product in America. So unless we have questions, and I hope someone's been screening the questions there as we've been doing the presentation. I haven't had a chance to see it. Is there anything else you'd like to see, Ron?
What time is it? 11. I'll tell you what, Bill, I think you did a great job for the very first one. We got about a zillion questions here. So let me see what we got. Let me try to get to what happens when there's an account balance and the client dies. Well, Anthony, if it's an option A, it's included in the death benefit. And if it's an option B, you get both. So you might say, well, that's better. And yeah, it's better from a death benefit perspective. But option A, long range, is going to be better for income. Okay? So just so you know. To double on the annuity, what kind of illness do you have to have? You can't do 2 of 6 adult daily living activities.
That's on the annuity. That is correct.
Okay. Can you change options during the year or only annually? From Frank Sullivan. Frank,
annually.
I think it's annually. Yeah, I've never heard of a product that I think it'd be impossible to do it other than that. What about New York? I have no idea. Bill, do you know if this product's approved in New York?
We're going to have to take a look at the product state approval list. So Anthony will call the 800 number, and we'll find that for you.
Okay. Now, I got a question from Connie Seaton, a great question. What about chronic illness in the future?
Chronic illness. They are working on chronic illness for this product. So they are working on chronic illness. A statement that I'd like to make about chronic illness.
But I want to make a comment here. If you got 80 or 100 or 150 or whatever this thing pays out, 170, 209,000 of income, can't you take the income and call that the chronic illness rider? I mean, it's going to pay income. So even as I looked at other IULs, I got a chronic illness rider, but if I've got an income, you know, remember this, income pays the bills. So if you build up, you know, with this product, with this incredible opportunity to build so much more cash value than any other product, the opportunity to do that, you build that income high enough, it's not defined as a chronic illness rider, but if you're chronic, you can use the income to protect you from chronic. So anyway,
absolutely.
Are the living benefits a no-cost rider? Absolutely. Can I get a copy of this webinar? It will be on our website probably in the next few days. Okay. We have the state is Colorado. That's fine. Doesn't matter. We just picked the state. Does the illustration show the target? We've already showed you that. Jeff Mance, incredible. Only 2.5 years, he gets all his money back. Wow. I agree. And
Jeff Mance, this is incredible, Jeff. It is absolutely incredible.
But here's what I got to say right now. You guys, with our other carriers, we annihilate some of our competition, especially the one that starts with W, F, G. We already annihilate some of our competitors with our other products. With this product, we're talking about dominance. This should create so much confidence in you with the domination kind of mentality. So now we don't just beat them; we slap them around like little, like I don't know what. I'll let you figure out the rest of that one. How often can the allocations be changed, Jeff? Every year, the end of the year. Are partial accelerations available? What does that mean?
They're talking about partial acceleration of the living benefits, and yes, you can do partial accelerations up to the certain amount. And once those living benefits go from $500,000 to potentially $2 million, we'll still have partial accelerations available.
Okay. Can they download the software while they're waiting to be appointed?
Yes, they can.
Okay. Frank, we did an option B for you.
You're missing all that. This is awesome. Great job, Bill. Bill's the best. Don't forget all those.
Okay, Bill. Great job, Bill. That was good. Is it Apple compatible? I doubt it. It is. Oh, this is web-based software, so you can do it on Apple. And Connie, I do understand what you're saying, Connie. The 209 might not happen when the chronic hits, but it also might be critical. Or, Connie, we sell the term on top of it. So, you know, the product is what it is. And I'll end with this. My number one reason I bought my IUL was for cash accumulation, the ultimate living benefit. I want to accumulate money for retirement in the most efficient way. If I've got to buy a term policy on top of it to solve for chronic, I will. So I just kind of want to put that in your thinking cap. So, guys, it's time. Thank you so much. Bill, you really did a great job. I was impressed.
You did. Hey, Petro, this is Jeff. There's one more spot. Yeah, if we could show people where to find the contracting and how to find the video, that is also available in the back office.
Okay, go for it.
So I'm going to take screen control real fast. And on the corporate website, this is very simple breadcrumb trail stuff. On the corporate site, the second banner you're going to see is right here. You just click to download the Phoenix and/or F&G contracting paperwork. Click on that link, and you can scroll down to the bottom, and here's the F&G. Click right there to get all the contracting for Fidelity and Guarantee to get your contracts done. That's right there on the corporate site under this second banner. Now, when you sign into your back office looks like this. We're working on 3 videos that will instruct a new person on what to do. They're not quite up yet. However, what you're able to do is go to FEGTV. Here are all the videos, all the trainings that we've got. Life insurance, just go down to Fidelity and Guarantee, and you'll be able to pull up, if I can find it, here we go, the Fidelity and Guarantee channel. And right here is a 4-minute video on how to do the software. The ABC 1, 2, 3 that you watched Bill do, here it is in a 4-minute video done by Ryan Parker with F&G. And then we're also going to have today, you'll be able to download the Synergy Global brochures. And here is the link to download the Fidelity Guarantee Synergy Global software. That link will also be in the back office under the F&G tab under Forms. And so there's your breadcrumb trail. That, if you want to copy that down real fast, you can, or just shoot me an email, Jeff at Freedom Equity Group, and I'll email this link out to you with all of the brochures. I have the email ready to go right now, so just shoot me an email. I'll respond back immediately and send it all out to you. So that was it, Petro.
Okay, thanks, everybody. I appreciate it. Great job to all. Bye-bye.